Hello traders, welcome to the next Well Trading Up YouTube channel. So we're going to have a quick trade review in GBPUSD, and this is in regards to last week forecast. If you're interested in following our weekly forecast on a daily basis, then you can do well to join our free Telegram community. So this is GBPUSD and this is the 4-hour time frame. So you guys know I made a graphic representation of this charts using the real-time charts to give us an explanation to an expectation I was having. This was something I basically shared in the mentorship community, but then I made it available in the free Telegram community for everyone also to just learn one or two from it. So what we can see from GBPUSD from the 4-hour time frame, last week we identified this perspective where we saw price took out the sell side liquidity. We had this bullish movement. From the 4-hour time frame here, we do not really have a valid break of structure here. So what we have here is that we have price swept this liquidity pullback and then continued again bullish. So what we can see, price pullback to the downside, taking out the sell side liquidity here. And we have the bullish movement to the upside, taking out this external high points. So what we can see, we have volume closed above that. So basically it means that our impulsive movement is from the low here to this particular high here. Price gave this inducement liquidities here and now creating this as the higher high points. So basically now we're seeking to see that price would take out this internal range liquidity. So this becomes the decisional point of interest, and this rejection block is now the extreme point of interest. So what we can see from the 4-hour time frame, we had this bearish movement to the downside. Here we can see that volume did not close below the swing low points. But in the 1-hour time frame is where we would see that volume close below that, giving us market structure shift. So you can see why I always say that the market is fragile. You would see that here in the 4-hour time frame, we do not have a market structure shift. In the 1-hour time frame, the market structure shift is established. So you can see why when you're trading, you need to also understand the narrative in a higher time frame, so that you know a strong sponsorship zone that institutions would mitigate, and then that particular sponsorship zone is going to hold price and further sponsor price in the expected direction. So what we can see here, we have this rejection block, sell side liquidity rated. Also, this took out sell side liquidity. So from the 1-hour time frame is where this is established as a valid higher low point, because from the 1-hour time frame we had a valid break of structure here, and price sponsored bearishness to take the sell side liquidity. But here in the 4-hour time frame, that is not what you can clearly see. So the market structure shift here is established from the 1-hour time frame. So what we can now see is that now price gave us this buy side liquidity here, because this is a valid pullback. Price fell again, failed to take out this low, another pullback. So this is minor inducement. This is what the major inducement. This is something that we structurally explained in the mentorship course program. So if you're interested in our mentorship course program, you can do well to check the comment section. You'll see the link to access the mentorship course program. You'll get information on what the mentorship course program entails and how long the mentorship program spans. So what we can now see is the major inducement, the minor inducement. Price fell to the downside, taking out the sell side liquidity, mitigating the rejection block here. And now we saw that price gave us this bullish movement back into this bearish fair value gap here in the 4-hour time frame. So this was where price closed last upper week before we had the forecast release, and then this explanation of the chart setup released in the mentorship group and also in the free Telegram community for the benefit of those in the free Telegram community. It was just at my own will. I just decided to just share that in the free Telegram community. So we can see this was Friday candle here. So this was the delivery of price. So clearly what happened was I saw we had this inversion fair value gap here. And from the 1-hour time frame, we identify a bullish order block here. So we're going to go to the 1-hour time frame to look at that. So from the 1-hour time frame, I pointed out the fact, I said, if price breaks through the 1-hour bullish order block, then we'll look forward to a bearish movement to the downside. So I marked out this for our bullish fair value gap, expecting to see price reaction here, because I believe that price may just give us the bullish movement from this for our bullish fair value gap. But then I was very quite rigid and expecting to see that it takes out the sell side liquidity, mitigating this for our bullish fair value gap here to the downside before we have the bullish movement to the upside. But what we can see is that price just traded into this 4-hour bullish fair value gap, respected this rejection block here and gave the bullish movement. But now we can see that price yet returned again last week into the 4-hour bullish fair value gap here, which I was pointing out to be the zone we would possibly want to see a buy reason last week when we saw this was Friday's candle movement. Last week delivery already. So I told us we want to see how price would trade, take out the sell side liquidity here, and then we go bullish. But then trading the sell movement, this was the first profit target area, and then in extension we're looking to see how we will trade into this. But what we can see is that price never took out this sell side liquidity and we had the bullish movement to the upside. So what we can see from the 4-hour, why I expected the bearish movement is the fact that we can see price gave us this movement, taking out this buy side liquidity, the minor and the major inducement, mitigated the bearish fair value gap. Here we can see the rejection to the downside. So identify the fact that now price here is reacting at this 4-hour inversion fair value gap. Price failed to break it to the downside to continue bearish. So price closed here previous weeks. That was 2 weeks ago. And now we can see price gave us a bullish movement on Monday. Then we had the bearish movement to the downside into this first bullish fair value gap. So we can see price did not take out the sell side liquidity. I was in extension looking at price taking out before we have the bullish movement. So let's check the 1-hour time frame. So here in the 1-hour time frame, what you can clearly see now, let's look at the structure from the 1-hour time frame. So you can see from the 1-hour time frame, we can see how price returned here, took out the sell side liquidity here, bullish movement. Here we have what valid breakout structure, because we can see this volume closed above this candle week high point. We had a pullback, sell side liquidity established here. Price gave us this movement to the upside, and now we can see a return. Price took out the sell side liquidity. So you can see here we have a higher low, and here we have a higher high, a new established higher low. So when price returned and broke this, you can see in the 1-hour we have volume closing below. We have a market structure shift, meaning price is giving us a temporal bearish structure. So that was the reason why I expected to see the possibility that price would take out this sell side liquidity, mitigate this 4-hour bullish fair value gap, and we have the bullish movement to the upside. But what we can see is that price just respected the first bullish fair value gap, and then the bullish movement occurred to the upside. So we can see the structural perspective from the 1-hour time frame. Impulse, market structure shift. Price here return again. Price established an inducement liquidity here. Price took out that inducement liquidity, but we can see this failed to continue bearish to take out this. Price again return. Price again now fell, finally taking out this. So we can see that, right? So basically now this is our minor inducement, major inducement, and we can see price give us a pullback, taking out the inducement, this liquidities, mitigating the 4-hour bearish fair value gap. And when price mitigated that, that was why I was not expecting the possibility to see bearish continuation to take out the sell side, mitigate this 4-hour bullish fair value gap before we can now frame bullish movement to the upside. Because what we can see is from the 1-hour time frame, we can see clearly that here we really do not have a valid sponsorship zone to consider here, because price have returned and then mitigated that already, which in the 4-hour time frame we're going to see that as a rejection block. So we can clearly see this is a rejection block. So price return mitigated that. So I was expecting to see the possibility that the institutions might just want to seek this sell side liquidity, mitigate this fair value gap here before we have the bullish movement. But then yet I had this particular bullish fair value gap in view. Are we together, guys? Because our liquidity exists in the form of the swing points and also in the form of our imbalances, our fair value gaps. So we can see here price just returned to fill up this liquidity, the fair value gap. And then we had the bullish movement. So price here has filled up the fair value gap, yet did not really seek out the sell side liquidity in the form of the swing low points. And then we had the bullish movement to the upside. So let's get back to the 1-hour time frame. So you can clearly see in the 1-hour time frame the bullish order block I was making reference to. So within the 4-hour inversion fair value gap is where we had this base zone. And that is where we can see price came to reacting at the base zone and giving the bullish movement to the upside. This is the 4-hour inversion fair value gap. And we can also see it here in the 1-hour time frame. It's a valid inversion fair value gap because it took out liquidity and then price returned to the upside and violated it. So we can see how price is just reacting at this base zone because we can see rally, base, rally. So we can see price return. So that was why I pointed out in the markup I shared in the mentorship community and also in the free Telegram community, emphasizing that if price breaks this, then we want to see bearishness to the downside. So what we can see here is that now price came. This is Sunday opening price here. So let's point out the opening price on Sunday. So we have our opening price here on Sunday. So we have the Sunday opening price here. So we can see price traded below the opening price. And we had this bullish movement to the upside. Price seeked this buy side liquidity. So in the 15-minute time frame, this should be Asia session movement. So London session took out Asia session high. And then I saw this displacement to the downside. I had my bearish entry here. Yeah, I shared that, the movement I took here. So I had this bearish entry here. And then we can see price traded into this bullish fair value gap. Don't forget, I told us in extension, I was looking to see how price would take out the sell side, mitigate this before we have the bullish movement. So we can see finally price broke through this bullish order block I was making reference to. Why did I expect to see a return and then to take an entry here? Because here we can see we have what change in state of delivery. And now we can see what bearish impulse to the downside. So we can see when price finally took out this bullish order block, we can see a return. Price retested it. And then we can see what bearish again continuation. Price took out this sell side liquidity, failed to take out this. Price fully mitigated the fair value gap here. And now we can see price now traded with impulse above the bullish fair value gap. So price here came, we had movement to the upside, price again for the return to the downside. Because now price has taken out the bullish order block I was making reference to. So price returned to retest that and we can see price fell. In confluence, you can see price here established a bearish order block. So price is trading below the Sunday opening price. So we can see again price return back to the upside. And now price traded to the downside, taking out the sell side liquidity. But price failed to take out the long-term sell side liquidity I was looking at price taking out to mitigate the 4-hour bullish fair value gap. And then we have the bullish movement. So here we can see now when price mitigated this bullish fair value gap, we can see impulse to the upside. So this is giving us the perspective to look at the possibility that price may not necessarily then have to take out this. And that was what happened. So price returned to fill up this fair value gap here in the 1-hour time frame, and we had the bullish movement. So what we can see is when price came back to the Sunday opening price, we had this form of price facing rejection here before finally price blasted through it back into this 4-hour bearish fair value gap. So we can see how price traded there, now returned back into the bullish fair value gap and blasted again to the upside. So this is just a quick review. Let's check the 15-minute time frame. So here in the 15-minute time frame, we can see, yeah, this is a Sunday opening price. So we can see how price traded to the downside and we had the impulse to the upside. So we can see the Asia session took out this buy side liquidity, but the Asia session did not sponsor bearish movement to the downside to take out this low. So that is why we can now see London session gave us a movement and took out what's the Asia session high points. This is something I've taught in depth in the mentorship course program about session trading, the power of tree accumulation, manipulation, and distribution, and in reference to the New York time zone, the 12 a.m., the 8:30, and also the launch hours. So what we can see is now price during the London impulse to the downside broke this low. We have break of structure here. We can see inducement liquidity. So we can see price traded to the upside, mitigating here where we have this change in state of delivery from the 15-minute time frame. And that was my entry. And then we can see New York sponsored word for the redistribution to the downside into the bullish fair value gap, the first bullish fair value gap. And now we can see price again traded to the upside. Or we can see this is Asia session. So price here traded and then took out the Asia session high points. displacement to the downside. Price broke this low point here, and now we can see price created inducement liquidity here, and price further went to the upside during the London session. What we can see is price traded into this fair value gap after price took out all of this liquidity, a trend line liquidity. So the London session still sponsored bullish movement to take out this buy side liquidity, mitigating the high created that day when price took out the Asia session high points. And then the London session gave us what? Distribution again to the downside. Now price took out this low points. And now we can see New York too also sponsored what? Bearishness to the downside. So during the London New York close hour, we had what? Bullish movement. Here we had this consolidated price movement. What we can see is that since price now failed to take out this extended sell side liquidity, we're looking forward to see the possibility that price will take out and mitigate the 4-hour bullish fair value gap before giving us bullish movements. So price respected this. So what we can see is from the 1 hour, the moment we saw that massive bullish candle to the upside, that should give us the perspective to just expect what? Bullish movements, rather than still wanting to see that price will trade to the downside to take out the sell side. So what we can see is when price return here, we know that price mitigated a sponsorship zone here from the 1 hour time frame, and also here in the 15-minute time frame we can see we have this inversion fair value gap because this took out was sell side liquidity. So price have returned into it, and what we can see is rejection to the upside, market structure shift. Price created a bullish order block. Yeah. So what we can see is price traded during the London session to the downside to take out the Asia session low. Identify the sponsorship zone below the Asia session low. This is it. And now price traded bullish to the upside. And now we can see bullish continuation strongly to the upside in GBPUSD. So that was what happened last week. So clearly we can see that here. You can see that bullish, massive bullish impulse to the upside. So we are expecting to see how price would return, because what we can see here is that price gave us what? Stack of what? Liquidity here. Trend line liquidity. We have this buy side liquidity. So we have this sell side liquidity here, this imbalance. So we're expecting to see price return to the downside to what? Fill up this fair value gap. And then we have what? Bullish continuation to the upside. So this is just a quick one. So why I decided to use the GBPUSD pair is to show us the fact that we shouldn't be so rigid with our analysis. We should always pay attention to the narrative in the markets, because yes, I had this particular zone in view, but then I was looking at the possibility that if price could just take out the sell side, mitigate this before we have the bullish move. So, but when you see now price respecting this first sponsorship zone, yours is to just look for the bullish movement. You get it, guys? So this is just what I want to show us. Cheers and God bless you all.